I mentioned at the top of the show that the meme stock community they're out in force, really supporting Jerome Powell. Are you surprised by that?
I'm not. It's kind of like the whole underdog mentality, and I love it. And just think about how many times in history you can go back for a long time and see how many Fed governors or Fed chairmen, receive support from the meme stock community or the trader community. It's not a lot. So this is a really rare thing, and I think it's kind of cool to see because he would be the least likely hero, for a bunch of young traders. So I kind of think it's cool. I like it.
But he's put a lot of money in their pockets. I mean, rates have been. Look, I'm not saying he has gotten everything right, but by and large, like I mentioned at the top, the market's been up and to the right since he has taken over as chair.
No question about it. There's not a person under 35 that has even experienced a downtick in 15 years. So, or maybe even longer, 16 or 17 years. When you start to think about it, the answer is yeah. There's no reason not to love the guy. If you just entered the market 15 years ago and you're, less under 40, you're damn straight. He's been daddy. That exactly.
Big Daddy Powell. Tom, look, nothing goes up in a straight line. I think it was Claudia Sam, who we had earlier on one of the shows this morning, saying that there could be a chaotic transition from Fed chair to Fed chair when Powell eventually rolls off, I believe in May. Is now the time to start preparing for more volatility in the markets, or do you wait for the final day before Powell is ushered out?
Well, I think it may be the time to start. This is kind of a buy the rumor, sell the news type thing. And I think that it's an interesting spot to start getting long some bonds because I think you could see a flight to quality if you see a pump up in volatility. But I do think that the next Fed chair, if it's somebody that is deemed to not be very independent, it's somebody that's, in Trump's pocket, that will not be a good sign for the equity markets at all. People will not like that.
And as I'm really interested to see what trial balloon now the Trump administration tosses out. You've had two of the biggest bank executives come out here this morning and say, we want Fed independence. It's important to bond markets. It's important to bringing down costs in this country. And sure, the bond markets have barely moved in response to this, but still, when these execs send a message like this, I think it should be taken very serious, Inez.
And you'll likely see more executives sending this type of message, sort of coalescing around Jerome Powell. And not only that, but you are also seeing executives talking about these moves from Trump to sort of make everything affordable again. You had JP Morgan's CFO, Jeremy Barnum, that was talking about the credit card rate caps, saying that this would be very negative, quite negative, very, very negative, even though he couldn't quantify sort of the impact. You also saw ExxonMobil's Darren Woods talking about Venezuela being uninvestable. So not only are you seeing executives talking around this issue of Fed independence and the need for Fed independence, but also slightly pushing back a bit against some of these moves that Trump is wanting to make, that he wants the industry to make, companies to make, in order to make prices more affordable again.
Brooke, I was going through that Delta report, and for me, it ticked every box of something that I want to see from a company that is priced damn near up for perfection this earnings season. Revenue strong, outlook solid, managing costs, calling out a big business with American Express, double-digit revenue growth. Zoom out for us, Brooke. What is the read in your view on the consumer after a report like this?
Well, I think it's worth noting that after this report, the stock is falling, and that might be because of the impact that the government shutdown had on Delta. But I think overall what this report and what we expect to hear from further airlines is that even though, and even JP Morgan saying this in their earnings call this morning as well, is that even though consumer sentiment is near record lows, even though it continues to hover around that, consumers are then turning to their wallets and they continue to be able to spend. We saw in credit card data, and we're clearly seeing it, especially within that Delta premium revenue. And it just goes to show that if consumers feel like it's worth it, then they're willing to make the splurge. And that's not just what we heard from Delta and JP Morgan this morning, but also there's multiple different retail conferences going on right now. And I was at one of them, the big show, the National Retail Federation's big show here in New York City on Sunday afternoon. And what many experts told me there was that if value is there, even if it is albeit at a higher price point, point, consumers are willing to make that splurge, and also self-gifting is something that consumers have really been leaning into, especially with those October, November, earlier holiday sales that we saw as well. And so it's really this idea that discount or not, if consumers they have the means and they really want it, they're going to take that plunge.